So Citadel isn't exactly a popular company right now, and if you don't know anything about that or why they're unpopular, why they're so controversial, then to be honest, this probably isn't the video for you. There have been a myriad of other videos put online on YouTube, articles all over the internet that you can watch and read to find out exactly what is so wrong with Citadel. In short though, they have been accused of massive amounts of market manipulation, most recently and most famously with AMC and GameStop, where they are basically suspected of colluding with other massive mega bank institutions trying to keep the prices of AMC and GameStop down at floor levels so that their shorts make money and so that retail investors lose money. Now, Ken Griffin is the man, the billionaire who runs Citadel, and so obviously being such a public figure and being in control of such an unpopular organization, he's quite unpopular as well. That may have just taken an absolute turn for the worse though, as he did an interview the other day where he went all out and basically accused retail investors, Wall Street Bets investors and normal people of being the reason for the market crash, claiming that they are costing pension funds billions of dollars and that they're making the country poor. Needless to say, this wasn't received very well at all. I'm going to show you a clip of the interview where he goes into this, and then I'm going to briefly explain why he's absolutely wrong. Of course, I'll link the interview down below in the description as well, and you can check out the comments in that video for yourself, and it is clear as day that he is not a popular man. So what did he really have to say then?
Can talk to me about Melbourne Capital. So it's giving up and shutting down. Did the founder speak to you before?
I did not speak to Gabe in the last couple of weeks.
Was it the right thing to do though, to shut it down?
Look, this is Gabe's business. It's Gabe's personal decision. I'm not going to second guess his choice in life.
But what does it mean for hedge funds in general? Are we going to see more episodes of some of these retail investors?
Well, I mean, the average hedge fund lives for about 3 years. So several hundred shut down a year, and the world goes on. Gabe was certainly an iconic investor over his career. Over his career, he did an incredible job for his investors. Kudos to him. We all react to adversity in different ways. He went through a really tough run. He chose a decision that worked for him.
What's the overall thinking on these retail investors though? Are they back? Was it a black swan? Is it something?
You mean the whole sort of meme stock phenomenon that got Gabe in trouble in GameStop last year?
Yeah.
It's probably a moment in time. You know, replay the history. You've got this enormous stimulus program from the federal government, sending checks to tens of millions of American households. And a fair number of those households did not need the cash. They put it into the stock market. And people were looking for connection. They were looking for something to be involved in. You had the rise of the Wall Street Bets and the whole Reddit phenomena. And I don't want to say our stock market devolved into entertainment, but there was certainly an entertainment dimension that came into play with money that was in some sense just dropped out of the skies into people's wallets. And they took a run at the stock market and GameStop and AMC and dozens of other meme stocks. I'd like to think it was a moment in time. I'd like to think that's the case. It's not how capital formation works best. And frankly, a lot of it came from a place that I don't think it was very healthy, which is like, let's try to take a firm like Melbourne and put them into bankruptcy. Like, great. So you basically help wipe out the pension plans of teachers. You feel good about that? It's not Gabe's money that you're taking down. You're taking down the money of a pension plan that belongs to a teacher. So I don't think it wasn't a very good moment in American capital markets history, but I think you have to replay history and go, where were we as a country? And people were locked up in their basements, kind of losing their minds.
So it's a COVID phenomenon.
It's a COVID phenomenon.
Have you been on Wall Street Bets?
Of course I have.
And?
There are some great videos of them trying to attack Citadel. I noticed that we always seem to stand in the end, but there's some really great videos done.
Such as? Now, everyone's going to Google instead of listening to what you have to say.
You can go Google and have fun on Wall Street Bets, entertain yourself.
So there are a bunch of problems with what he just spoke about, but one of them, and one of the most important ones, is the idea that he just completely ignored risk management on behalf of hedge funds. He made it seem like investing in a hedge fund through a pension fund or through any other kind of vehicle is a risk-free venture, that it's supposed to make your money go up and it only goes up and it never goes down. And if it does go down, well, then there's obviously some retail investor to blame. He refuses to acknowledge that actually shorting a stock is a very risky play. Your upside is limited to exactly a 100% gain, while your downside is literally infinite, and that isn't a good idea to pursue that kind of investment. And yet, thousands of hedge funds, including Citadel, choose to pursue shorting because they think they can find money where other investors choose to avoid. The reality is here that if you as an investor, or if a pension fund invests in a hedge fund, or if an active investor, anything like that, if they choose to engage in short selling, they are putting themselves at risk of making huge losses and actually not getting much upside either. That is something that every investor has to reconcile with their own risk management, with their own risk tolerance and things like that. And hedge funds have to know that, and they do know that. And Ken Griffin knows that as well, but he refuses to make that point. He instead makes the point that actually it was retail investors attacking these companies in a positive way, causing pension funds and hedge funds to lose money. Now, of course, this is just wrong. These shorters, those partaking in short selling, are wrong, and they are responsible for their own risk, no matter what Ken Griffin will tell you. Of course, this is an absolutely incredibly unpopular thing for him to come out and say. There are a myriad of different articles blasting him for this, Reddit threads where people are disagreeing with him, and as I said earlier, the comments to that very same YouTube video where he really doesn't come off in a good light, and pretty much everyone recognizes that he is wildly off on this measure. Now, that being said, the interview is actually really quite interesting to watch, if for no other reason than to get an idea into the mind behind the man who runs Citadel. It's about 40 minutes long. Yes, there's a fair amount of waffle, and he does a spectacular job of speaking for 40 minutes without really saying anything concrete. But if you do have the time, I do actually recommend checking it out. It is quite valuable, even if it is also infuriating to listen to or watch at times. Let's not forget that yes, Ken Griffin may be an angry man, he may be wildly unpopular, but he is also wildly successful. He is magnificently rich. He has built a magnificently successful hedge fund as well. And despite being underwater on the shorts for AMC and GameStop over the last couple of years, the things which really blew his fund up and made him a household name in the finance investing niche, Citadel does still perform really quite well. Over the course of 2021, his fund came out with a 26% return, which is nothing to laugh about, especially because actually by the end of the year, the latter 6 months or so, stocks for the most part were falling, and pretty much no other active investors made those kind of gains. It's just a $43 billion fund, and yet it had inflows of $28 billion throughout the entirety of the year. That is without a doubt successful. And actually, he's had a really strong start to 2022 as well. Of course, the markets on the whole have been falling across the board. The Nasdaq is nearing in on being a third down, almost 30%. The S&P 500 is nearly down by 20%. The Russell 2000 is down by over 20%. Almost every single index in the world right now is down for the year. And yet somehow Citadel not only managed to make a 7% gain across April alone, but that actually means it's made a 13% gain for the first half of 2022 so far, which is, I can't stress enough, really damn impressive. Even if you don't like Ken Griffin, and I cannot fault you for thinking that, I do not like him either. I think he's sanctimonious and insufferable. You can still learn from what he has to say. He clearly has some incredible insight into the markets, or he wouldn't be able to build an institution like this that can perform so well while most active investors are getting absolutely hammered. We ought not let our distaste for someone stop us from learning and enriching ourselves after all. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. They can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to iTrust Capital, a site that allows you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you think that crypto going down is a buy-in opportunity, then now is the perfect time to join iTrust Capital. Thank you all for watching. Stay stoic. Until next time.